Howdy, everybody. Welcome to Liberty Call. Today is Thursday, November 21st, 2024. Hope you're having a fantastical day out there in the interwebs. It's actually turned into a pretty nice day here. It's kind of overcast and gross this morning, but sun's out, and I mean, it's still cold. Don't give me. It's, I think, probably around 50, in the 40s, 50, maybe around there. So, anyways, hope you're having a great day out there. Kind of a boring day. I mean, other than Matt Gaetz deciding that he was going to step away from the Attorney General position, which, again, has nothing to do with the financial world. Well, maybe a little bit. But, in the grand scheme of things, it doesn't really, make a big difference, for me. But, or you probably out there, unless you're committing federal crimes. But anyways. All right. Well, before we get into today's news, see some green on the screen. That means some good news for today. You could do me a favor. Give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right. Let's hop into the markets. Dow Jones was up 1.06%, 461 points. Closed at 43,870. S&P 500 up 0.53%, 31 points. Closed at 59,048. NASDAQ up 0.04, flat for the day, 7 points. Closed at 18,973. I guess the blue chips in the broader market kind of drug the NASDAQ back into the green because it was red most of the day. VIX down 1.69%. It's at 1687. Hang on a second. Let me hit the mute. Sorry about that. Didn't want to cough in your ear. All righty. Canada up 1.41%. Brazil down 0.79%. And Mexico flat at 0. Let's jump over to Europe. Germany up 0.74%. The UK up 0.79%. France up 0.21%. Netherlands up 0.88%. Spain up 0.19%. Italy up 0.2%. Switzerland up 0.51%. And Portugal up 0.12%. Russian exchanges still in the red. MOEX down 0.95%. RTSI down 1.41%. And the overnights, the Nikkei in Japan was down 0.97%. Australia down 0.04%. New Zealand flat at 0. The Shanghai in China was up 0.07. The Shenzhen component down 0.07. China A50 up 0.09. DJ Shanghai up 0.1. Hang Seng down 0.53. And the Taiwan weighted down 0.58% for the day. All right, so those are our markets. Feeling good about it? I mean, there's a lot of problems out there that, just because Trump got elected, it didn't fix anything. I mean, we still have all the same issues, and he hasn't even taken office. So, not that I have a lot of faith in the, I have more faith in Trump than I do the GOP as a whole, because the GOP are nothing but, they're just socialists who like spending their money on a war as opposed to poverty and the stupid. So it's just one form of socialism or another. I mean, do you want your money going to, build bombs and, imperialism and colonialism around the world, which is what we do? Or do you want to waste it on, health care for fat people or sex changes or whatever that the left wants to, spend your money on? So it's kind of a mixed bag. I like the libertarians. They want as little government as, it'll fit into a thimble. I mean, basically, the only laws are you don't hurt people and you don't take their stuff. And beyond that, you're pretty much free to do whatever you want. So, granted, culturally, in your little communities, you may have more rules, but at a federal level, it should just be that. It should be very, very simple. All right, let's jump into today's market recap. Wall Street closes higher as Dow and S&P hit 1 week tops. So, all right, Wall Street's major indexes turned positive on Thursday after volatile trading, with the Dow Jones Industrial Average reaching a 1 week high. The blue chip index was boosted by Salesforce, which surged 5.2% following price target increases from 3 brokerages. NVIDIA rose 0.8% after its earnings exceeded expectations. It projected strong fourth quarter revenue. Despite the upbeat report, some investors were disappointed by the slower growth outlook compared to recent quarters. The Philadelphia Semiconductor Index climbed 1.5%, reflecting optimism in the broader chip sector. Yeah, and last night, as I don't know what I was doing, probably listening to a podcast and watching South Park, or was I watching football? I don't know. Whatever. Anyways, I read the financial headlines all in the evening, and I'll check them in the middle of the night if I wake up. But anyways, the NVIDIA data had come out, and I would have expected that we would have seen a jump in the Asian markets due to the fact that they're somewhat tied to the semiconductor markets and AI and technology, and they were down. It was very strange. So it leads me to believe that there are some underlying issues there that we're just not aware of yet. Granted, they have way too much debt and, there's stimulus problems that they're doing like in China and things like that. All right, jumping back in, Alphabet dropped 5.4%, hitting a 2-week low after the Justice Department argued for breaking up Google's Chrome browser to address monopoly concerns. The loss weighed on the S&P 500's communication services sector, which fell 1.93%. Amazon.com lost nearly 2% amid reports of a likely EU investigation into favoritism for its private label products. Shocking. Economic data showed jobless claims fell unexpectedly last week, hinting at potential job growth in November. Investors are focused on Federal Reserve commentary ahead of the mid-December FOMC meeting. Market bets suggest a 25 basis point rate cut is likely. Richmond Fed President Tom Barkin warned of heightened inflation vulnerability, while Fed President Austin Foolsby, that's Goolsby for normal people, supported gradual rate reductions. Of course he did, because he's a big government idiot. Geopolitical tensions between Ukraine and Russia pushed crude oil prices higher, lifting the energy sector by 1.1%. Deere gained 9% after upbeat earnings, while AI company Snowflake soared 34% on revenue forecasts. Advancing issues outpaced decliners by over 3-1 on the New York Stock Exchange, and the S&P 500 recorded 62 new 52-week highs. Despite mixed sector performances, the markets maintained positive momentum, supported by strong earnings and expectations of future rate cuts. Yeah, everybody wants that cheap money. All right, let's dive into some data. October existing home sales comes to us via First Trust, and Mr. Bryce Gill is the author. Existing home sales in October posted their largest gains in 8 months, rising 3.4%, signaling some recovery in the housing market. However, the pace of sales remains historically low, near levels seen after the 2008 financial crisis. Again, another problem created by the big banks and the banking system. Weird. A key factor limiting a broader rebound is the continued rise in mortgage rates, with the 30-year fixed rates climbing back above 7% since the Federal Reserve began cutting rates in September. This has hindered the expected boost in affordability and kept many potential buyers cautious. Home prices are also increasing, with the median price of existing homes up 4% year over year. While the market as a whole remains sluggish, luxury homes priced at $1 million and above have seen a robust 23% increase in sales over the past year, compared to a modest 2.9% rise across all existing home sales. This suggests high-end buyers and sellers are adjusting to higher interest rates more readily than other segments. The mortgage lock-in phenomenon continues to impede market activity as homeowners who purchased or refinanced at lower rates before 2022 remain reluctant to sell. Inventory levels have increased by 19.1% over the past year, pushing the month's supply of homes to 4.2%, closer to the 5.0 benchmark for a balanced market. However, tight inventory has prevented significant price declines despite the slow sales pace. In other economic news, initial jobless claims fell by 6,000 to 213,000, while continuing claims rose to 1.908 million, indicating slower but steady job growth. The Philadelphia Fed Index, measuring regional factory sentiment, dropped to negative 5.5 in November from a plus 10.3 in October, reflecting softness in manufacturing. Overall, the housing market shows signs of gradual improvement, but higher rates and tight inventories continue to weigh on broader recovery prospects. So that's some awesome news. All right, moving on. Article from Zero Hedge. Investors are increasingly reluctant to buy U.S. Treasuries even at these yields. So and this was authored by Bas van Geffen, of senior macro strategist at Rabobank. All right. The European Central Bank's latest financial stability review raises concerns over the heightened risk of a sovereign debt crisis, particularly pointing to France's weak fiscal fundamentals and sluggish growth. With countries facing high debt ratios and refinancing at elevated interest rates, the ECB warns that fiscal instability could hinder necessary investments in structural improvements such as climate change, defense, and productivity. Climate change is not an improvement. You could go all nuclear and reduce your greenhouse gases that you're so worried about, to almost nothing. All right. It's about making money. It's about helping out their friends who are in that industry. I mean, because that's how the government works. They have friends in a particular industry that they want to steer the government towards. So they get elected or they bribe someone in those positions to, steer the government towards those industries. And then those industries give them bribes. And, then the government gives them a big pot of money. And then they trade back and forth. All right. Corporate challenges also reflect the need for reforms, as demonstrated by Ford's decision to cut 4,000 jobs in Europe due to weak electric vehicle demand and competition from China. This highlights Europe's struggle with structural inefficiencies, which are compounded by political challenges in balancing reforms and social spending. Meanwhile, wage growth data complicates expectations for aggressive ECB rate cuts. In Q3, Eurozone wages rose 5.4% year on year, driving Germany's 8.8% collective wage increases. While this spike may not be sustained, it underscores persistent wage changes, especially in contrast to more modest wage trends in Italy, Spain, and France. Sticky wage growth suggests inflation risks remain, signaling that while a 25 basis point rate cut in December is likely, the ECB must proceed cautiously in its easing cycle. In the U.S., President-elect Donald Trump faces mounting challenges in economic policy. A key decision looms over the appointment of Treasury Secretary, with Mark Rowan emerging as a potential candidate. The role is pivotal, balancing Trump's disruptive agenda with fiscal stability. I can't tell what this person thinks of him. Concerns about the U.S. fiscal deficit are intensifying, highlighted by weak demand in a recent 20-year Treasury bond auction, despite rising yields. Both the ECB and the incoming U.S. administration confront significant hurdles. Europe struggles with structural reforms and fiscal risks, while the U.S. Navigates market apprehensions over Trump's policy plans. These dynamics underscore global economic uncertainty and the delicate balance required to maintain stability amid evolving fiscal and monetary policies. Yeah, and if you think we have inflation problems, they are much worse over in Europe. So, I don't know, count your lucky stars that you live over here. Granted, if you were already hand to mouth before all this stuff started 4 years ago, it probably doesn't make it feel any better. All right, one last bit of news. I've seen this and heard this in a number of podcasts and broadcasts that I've seen here in the last few days. This comes to us via the Forbes. Leave the U.S. A village in Italy is selling homes for $1 to Americans. Hey, all those people who say I'm going to leave the country if Trump's elected and all that stuff, here's your opportunity. There's a home for you in Sardinia. All right, let's get into the article. The picturesque village of Olole in Sardinia, Italy, is drawing attention with enticing offers, homes for just €1 or $1.06 American. This initiative targets Americans seeking to escape from political and social tensions and aims to rejuvenate the village, which has suffered from population decline. Olole's mayor, Francesco Colombo, explicitly prioritizes attracting Americans to help revive the local community. So, any takers? You want to move over to Italy? I mean, I hear it's pretty nice. This offer is a part of a broader trend across Italy where depopulated regions use incentives to attract residents. For instance, Tuscany has offered up to $32,000 to new residents, and Sardinia previously provided $15,000 to move there. These efforts stem from a 2016 report warning that nearly 2,500 Italian towns could vanish within 25 years due to depopulation. Young Italians leave for better opportunities and have left places like Olole with aging populations and vacant homes. Olole's program includes three options. $1 homes. Buyers must commit to renovating these properties within 3 years, with costs ranging from $21,000 to $52,800. Move-in ready homes, priced up to $105,000 for those preferring minimal hassle. And number 3, digital nomad program, offering free temporary housing in exchange for community contributions, such as leading workshops or creating art. What distinguishes Olole's initiative is that it's comprehensive support for newcomers, offering guidance through the property purchasing and renovation process, as well as assistance with navigating Italy's bureaucracy. Government. However, potential buyers should consider the hidden costs, such as renovation expenses, legal fees, and taxes, which could raise the total investment to somewhere to between $35,000 and $446,000. Despite this, it may still be cheaper than the U.S. median home price of $440 and comes with the added allure of La Dolce Vita, one of Italy's blue zones known for its relaxed lifestyle and longevity. Well, if I could get my big diesel truck across the ocean, I'd consider it, but I don't think I can. And I like driving my big F-350. It's paid for. Doesn't take a whole lot of maintenance other than changing the oil and the fuel filters and stuff like that, and new tires every 5 or 6 years. So I think I'm going to stay here. I like it in the mountains, but hey, it's something to consider for you folks out there. Maybe you want to move abroad and sell your place here in the States, move abroad and, live the life of whatever you do on Sardinia. So anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to get you back on track or show you how to get on track. All right. Well, like I said, that's everything I had to cover for today. If anyone needs anything from me, go to the website. Otherwise, have a great evening and I'll talk to you next time. Adios.